Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 20th of December, 2018, and we're addressing and revealing to you our interpretation on the Fed's interest rate decision and future strategy. At last, the Fed has now clearly communicated its future interest rate policy, its goals, and the markets do not like it. Yesterday, the Fed raised interest rates in the United States by 0.25%. So the Fed's benchmark rate now ranges between 2.25% and 2.5%. It is the fourth rate hike this year and the ninth rise since Peter Schiff publicly declared that the Fed can never raise rates some 3 years ago. The immediate stock market reaction was brutal, with the Dow and S&P 500 closing down around 1.5%, while the tech-heavy Nasdaq lost more than 2%. Now, many may ask, why is this? Fed Chair Jerome Powell intimated at the press conference that interest rates were only likely to rise twice next year as opposed to the envisaged 3 times. Well, we can tell you why. The financial talking heads had persuaded themselves that the Fed would take into account the protestations of President Trump, the slowing down of world economic growth, and the strong but weakening US growth data. It's now forecast that growth for the United States for 2018 will be 3%, as opposed to the envisaged 3.1% for the year. Instead, the Fed made its policy instantly clear. It's a policy of symmetrical inflation, around 2%. For those who may not know what this term means, it is simply defined as an inflation target, where a central bank responds when inflation is too low as well as when inflation is too high. In contrast, the European Central Bank, for example, has a non-symmetrical inflation target. It is compelled to take action only when inflation is too high. Now, why is this important? Well, we're old enough to remember the old monetarist days when inflation was curbed by restricting money supply growth, and the key instrument, though not the only one, was the use of interest rates. Now, we have often heard in the past central banks and governments setting inflation targets, but being accommodative and allowing overshoots and undershoots. But it is clear to us that the Fed is determined not to allow either to happen in any significant measure. When asked about political interference, Jerome Powell's response at a press conference after the rate rise announcement said, quote, "Political considerations play no role whatsoever in our discussions or decisions on monetary policy. Nothing will deter us from doing what we think is the right thing to do." End quote. The result of this rise and following current interest rates policy, the Fed admits that it expects lower growth next year. It projects the US economy will expand 3% this year and 2.3% in 2019, lower than the 2.5% it predicted in September. And this is the important part to note. The Fed is comfortable with this. Now, we listened and read Powell's speech and the answers he gave to reporters' questions in detail. And the important takes we extracted, other than those mentioned already, were as follows. 1. As a committee, we do not desire inflation undershoots, but are very close to 2%. Our symmetric goal for the Fed. Symmetrically around 2% remains to be accomplished. 2. Interest rate policy does not need to be accommodative, but neutral. And 3. Once neutral rates are achieved, the Fed shall then solely look at data, which will lead it to adjust outlook and policy. Now, this latter point is important. Here it is saying that the Fed will lead the way until this symmetrical inflation target of 2% is reached, and then it should be reactive, depending on economic data. So this is saying to the markets that interest rates may still go up again next year, and that the Fed will not allow either an overshoot or significant undershoot. So all of those pundits and so-called experts who are saying hyperinflation is upon us had better take note. The Fed will nip that in the bud long before inflationary pressures take hold. Fed policymakers' median forecasts put the federal funds rate at 3.1% at the end of 2020 and 2021. Gross domestic product is forecast to grow 2.3% next year and 2% in 2020. The unemployment rate, currently at a 49-year low of 3.7%, is expected to fall to 3.5% next year and rise slightly in 2020 and 2021. Our take on this, and we know it won't be popular with all, is that the Fed is absolutely right to do what it is doing. And we do not often say this. A growth rate of between 2.5% to 3% is a decent, manageable rate over time. Inflation at 2% is an acceptable inflation level, though some economists would like to see a little higher, and an eventual interest rate level of 3% is again manageable and reward savers as well as not punish borrowers, especially if inflation stays at 2%. Short term, the markets won't like it, as the fact that more interest rate rises are on the horizon and that future economic growth will be tempered. But they will adjust. Frankly, it's what the market needs, as it was clearly heading towards bubble territory. It's also moderately dollar supportive, with the dollar index standing a little above 96.3 at the time of writing, and gold and silver prices are up on the week, with gold currently at $12.55 and silver at $14.75, both of them aiming to test that $1,300 and $15 levels. Now that it is clear what the Fed's intentions are, policymakers, businesses and institutions can plan accordingly. So we have a slightly dovish tone, but with firm resolution to do whatever is necessary to keep inflation at that 2% level. What does this mean for gold and silver? Well, frankly, moderately positive. But do not expect to see any significant rises or falls anytime soon. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.